Hello, my name is Peter and I want to welcome you to the first of a series of videos where I'm going to take a strategy and actually analyze it and customize it so that it's absolutely optimized to work around the way that I see the markets. I specialize in taking strategies off the shelf, so things you might see on the internet or find in books, and I actually develop them into fully fledged trading plans. And I do this a lot with lots of different trading techniques, and I've been doing it over the last couple of years. So I thought that this time I'm going to video myself. I'm going to do screen captures of how I go through this entire process, and I'm going to use the Fractal Breakout strategy to demonstrate how I backtest, analyze results, optimize it, and then review the results again in order to formulate a trading plan over a few months to actually get one that is perfectly unique to me and I can use over and over again, because you get really familiar with it using this technique. And this is actually, I reckon, one of the only ways that that anyone could make a success out of trading. Most professional traders, I'd say 90% of them out there, went through this process somewhere or another of customizing a strategy to suit themselves so that they have a unique trading edge. Now I'm going to do this with the Fractal Breakout strategy by Bill Williams. He first published this, I don't know how long he's been trading it, but he first published it in the 80s, so about 30 years ago. And he's got it in a book called Trading Chaos, which I read in 2007 or so. And so I'm going to take that strategy, I'm going to use elements of it, and I'm going to backtest it, optimize it, and I'm going to trade it live. And I'm going to show you how to do the whole process. So enjoy. Right, so I'm going to set up the fractals and actually explain the strategy now. I do have other videos on this, and what I'm going to do is just go over it briefly now. Now, an up fractal is simply a bar with two lower bars either side. So this bar here will be an up fractal simply because it's got two lower bars on this side and two lower bars on that side. So both the left and the right side have lower bars. The same goes for down fractals. If you have two higher bars on each side, so this is a down fractal because it's got two bars there and two bars there that are both higher. Now it's just simple. Basically you can also see it as a swing low, a local swing low. Now I'm going to insert the fractals here, so go to indicators, insert indicators, and Bill Williams has his own little section here, and I'm going to include the fractals. Any sort of white color will be fine, and as you can see all the fractals are outlined. So here's the one I spoke about, and then there's another one. So I'm going to insert another indicator called the alligator. Now this is just fine, that's okay. And this is what I'm going to do. So I'm going to take the break of each fractal and trade in the direction of the break. So for example, if we have an up fractal like we do here, when price breaks it there, I'm going to go long, provided that the break is above this red line, which is the red alligator line. So this one would be valid because I will take that trade. Now what I'm going to do is I'm actually going to go back in time and backtest this and record every single thing. Now it's that simple. This is how simple the strategy is. Now what I'm going to do as well is I'm going to scale in. So let's say, for example, the first entry on this one is up here to go long. So I'm going to go long on the break of this fractal here, and when price breaks it, I go long. Now every time another fractal is formed and is broken, I enter again. So I'm going to enter this trade on the break of this one. So I've entered here already. Let me draw a red line. Right, so I'm going to enter there. That's my first entry. Right, there's my second entry, and then here would be my third entry. So where will I place my stop loss? Like, my initial stop loss will be below the nearest fractal at least. So this is the stop loss. There's the stop loss. There's the first entry, second entry, third entry, and this trade will still be going. And what I'll do is I'll actually move my stop loss. So if I enter the trade here, I will move my stop loss every time to the nearest fractal, nearest down fractal. So I'll move it there, I'll move it there, and then I'll move it there, so that I protect my position and I actually move behind the swing lows and for price to actually invalidate my trade, it needs to break another fractal. So this is the daily chart, by the way, on EURUSD. So what I'm going to do is I'm going to backtest it. So how am I going to do that? Well, I'm going to bring in my Excel sheet. So this is going to be my backtest worksheet. I've got loads of stuff here. I've got date, trade ID, strategy, prepare the direction, all these things, my target pips, my risk and pips, the risk reward, pip value, all that kind of stuff. Now I'm going to take a few things out because this is actually the way that I record my normal trades now. What I need is I don't need pip value. Right, okay, yeah, I don't need that. Exit date, exit price, that's fine. Pips, results, that's good. Money, we don't need money. Right, so let me get rid of money. Right, delete that. Cumulative, that's fine. Percentage, that comes with them. Okay, so let me go through the first trade. Now, what I want to do is I'm going to pull this back. Pull this back to a reasonable time. Let's see, 2007. Right, so we have a few years of backtesting. 2007, what I want to do is I'm going to cut it off, let's just say here. Right, so this is my starting point, 2007, so it will be the 19th of the 12th, 2007, so over the Christmas period. A little bit dangerous time to start, but because we're going to have a few years of results, there should be no problem there. Now, the first thing I'm going to do is look for the first fractal after this period. Now the first valid fractal is this one, but price never actually breaks below it, and there's another fractal there formed which is broken over there, but the next one is the up fractal. So this is the first fractal that's entered, and what I want to do is just check out the entry there. So that's 1.4834. Right, so by the time this breaks, this fractal would have formed, this down fractal, and then so that is my stop loss. Right, and then we have no target, so what happens? Price knocks us in and we get stopped out pretty much straight away after the second day. So I'm just going to add that exit in there, which is going to be the same as the stop loss. Right, okay, so I filled out all the information, went long on EURUSD at those prices. There was no target, we're just going to be following the stop loss. So the risk in pips, then we lost 1%, so we lost $1,000. So we're going to pretend that this account has $100,000 in it, and then we just carry on and do this for all the trades on EURUSD until we get to today.